Thank you so much, Mauro. It's a pleasure to be here, and especially with such an esteemed panel. Thank you so much for making this possible to GFRID. So the panelists who have come before us have really, I think, informed a lot of people in this room around the challenges getting money from the global north to the global south. And on this panel, we're going to go a little bit more into detail around the plumbing, around the technicalities, so that people in the room understand what is required from a broader set of stakeholders to actually enable this flow of capital. So we talk a lot about the potential, and we have been talking a lot about the potential for a decade or more, and the people on this panel sitting beside me have been part of that journey from the beginning. And we talk a lot about this potential, but we don't really understand, I think, just how difficult it is to create products for the diaspora to invest back home, right? So to give you some idea, if you're sitting in the diaspora and you want to create a product to invest back home, you have to go and find the diaspora, organize it, segment it, map it, train them on the investment opportunities that are available and how they should be thinking about risks, just like you would any other investor. And then you have to design a product, design something that actually meets their needs. And you are sitting in a country where the regulatory environment has not been designed with these investors in mind. And so you've got an extraordinary number of barriers facing whatever type of product you're going to build. And then once you've done that, you need to go look at the demand side, right? Look at who is going to be benefiting from these financial flows. If it's startups and SMEs, you're not going to sit with all of the same challenges as anyone who's trying to invest in a startup or SME. And we could speak for an hour about just how difficult that is, right? For anyone who's even here on the ground. So needless to say, the people in the private sector that have dedicated the past decade to solving these challenges are very special people. They care very deeply about what they do. They care deeply about our continent. They've often done years and years of work pro bono at their own expense, bootstrapping to get to where they are. And I really believe that it is unnecessarily hard to do what they're doing. So let me allow all of our panelists here to introduce themselves to you and make this a little bit more personal. Tell us why you care about diaspora investment and why you're doing what you do today. So let's start with Alain.
Thank you, Elizabeth. My name is Alain Riquier, and then I'm a founder of an equity crowdfunding platform. So why do I do what I do? Is, two issues came into my life when I started my journey as an entrepreneur. So I was based in Africa before, so I wanted to start a business. I couldn't get access to finance. So as you know, we live in a country, in Africa, it's a banking system. So if you are a startup, it's hard for you to get a seed capital to start your business. So then I decided to leave the continent and then went to study in Europe. So after my studies, then I started working in a private equity, in investment, and then I was also working for incubators. Then I came to Nigeria. It was back in 2017 to support an incubator and then some startups. And then I found two investment opportunities in those startups, but I noticed that I couldn't invest in those companies since I was based in the Netherlands. So then from that moment, I was like, so there are so many people like me in the diaspora who would like to invest, but they don't have the right financial product. So then from that moment, I decided to build a financial product for the diaspora, and then which is an equity crowdfunding platform. So we do two things. We connect, we look for startups with high potential, and then we find diaspora that we put into what we call business angel networks, and then we connect them to those investment opportunities. So using an equity crowdfunding platform. Thank you.
Thanks so much. I feel like we're brothers and sisters in arms on this journey. Right, Andrew from Kiva.
Thank you so much. Good morning, ladies and gentlemen. My name is Andrew Kabucho, working as an investment manager at Kiva. Kiva is a US-based, impact-focused asset manager that was formed with a mission of creating financial access to underserved communities in emerging markets through the peer-to-peer lending mechanism. So Kiva has been powered by our crowdfunding platform, which is basically a publicly available website where we empower lenders in the global north with opportunities to lend to deserving entrepreneurs and micro borrowers in emerging countries. So we are actively present in about 80 countries in Asia, Africa, and Latin America, where we have, I would say, catalyzed lending of close to $2 billion since inception in 2005. And as a company, we believe that, much as, dreams can be universal, opportunities are not. And we purpose to create these opportunities for deserving micro-entrepreneurs in the global south through linking them up with lenders in developed countries. So we are mostly present in the US, where we have a network of close to 2 million lenders. And of course, the diaspora community is very important to us because being present and active in 80 countries in emerging markets, they can always find opportunities to invest, and not necessarily invest, but also create social impact or social economic impact in the countries from which they originated. So we will engage more on the model and some of the ways we can further unlock capital to these emerging opportunities. Thank you.
Thanks, Andrew. Right, and then Mohammed from the Ethiopian Diaspora Agency, you've got quite a unique role on this panel in the sense that Mohammed hasn't created a product or an instrument per se, but he's a critical person for those of us who are. So Mohammed, please tell us why you do what you do, why your role exists.
Okay, thank you. Okay, thank you. Well, actually, having a diaspora investment product and owning that product are two different things. As a person, I'm Mohammed from Ethiopia, the Director General for Ethiopian Diaspora Agency, now currently the Ethiopian Diaspora Service. It's an institution that is fully dedicated to organize and to mobilize the Ethiopian diaspora and to bridge the Ethiopian diaspora with their home country, and also to facilitate their demands in terms of business, trade, and industry, whatever, their engagements at home. So actually I'm here to take notes in between hundreds of public sectors that are very focused and resourceful in diaspora engagements. So as a government institution, we are the first contact person for our diasporas, whether they are coming in organized or private. And also we are the institution to facilitate their investment projects, both in cities and also in regional governments. And also at the embassy level, we are the responsible institution to communicate, to disseminate information regarding the investment package and potentials at home, and also the necessary platforms available. Thank you.
Thanks, Mohammed. And lastly, we've got Johannes from DT Global, and I know that if I were to say you are the Director for Market Systems at DT Global, that does not translate at all the work that you really do. Johannes, tell us a little bit about your passion projects, why you're in this space, how you got here.
Thank you, Elizabeth. First and foremost, I am a member of the diaspora. I left Ethiopia when I was 16, some 36 years ago. I'm dating myself. A very difficult time. Like many in the diaspora, we leave home for various reasons. Mine happened to be war, civil war, and persecution. And my family and I ended up in the United States. We found refuge. And so I'm very proud to say I'm an Ethiopian American. Beyond that, professionally, I'm a securities lawyer. I practiced law in the United States, mostly in New York, for about 10 years. 6 of them spent on Wall Street, working for a firm called the firm that practiced mostly in the financial sector. I worked as a bond lawyer and worked with institutions, both sovereign as well as financial institutions, and financing various products. For the past 15 years, I've been in the international development space, working for various institutions, but continue to do both my diaspora-related work as well as development work. I am the founder of the Ethiopian Diaspora Business Forum. I am on the advisory board of the African Diaspora Network, and I am a trustee of the Ethiopian Diaspora Trust Fund, which was inspired by the Ethiopian Prime Minister to collect funds to support social developments in Ethiopia. Raised $7 million from 25,000 small donors from 90 different countries. All of these are Ethiopian diaspora. And my day-to-day job, Elizabeth, you're right, as a market systems director, but it also includes working with the diaspora. For example, one of the projects we're working on is with the Lebanese diaspora in Lebanon. As you know, Lebanon is going through very difficult times, to help mobilize diaspora investments. Eric Guichard, who spoke yesterday, is one of our experts working with us in promoting investment and development with the Lebanese diaspora, and many more. I'll speak later to the very specific work we do related to diaspora investment later. Thank you.
Thank you so much. So we're going to do a round of questions to our panelists in which they're going to explain what exactly their product is, right? So how are they allowing individuals in the diaspora to invest back home? And I want all of our panelists to clearly distinguish between donations from the diaspora and investments from the diaspora. Sometimes, because of the regulations, people who are trying to facilitate these flows find themselves in a space where those two things overlap, because investments are regulated and donations are not. So that's a key thing for everyone in the audience to understand. Another key thing to understand is when we're talking about the diaspora, very often, we've spoken a lot about segmenting and mapping and who is investing in what. But in general, you're dealing with individuals, ordinary people. And as soon as you are going to individual investors, from a regulatory perspective, you're talking about retail investors. And anyone offering a product to retail investors will find themselves in a regulated space. So these are important concepts to understand as we go through this conversation. You'll be hearing about crowdfunding, you'll be hearing about equity crowdfunding, debt crowdfunding, other forms of crowdfunding, and you'll be hearing words like investment funds and trust funds and syndicates. All of these things have one thing in common. They are trying to pool relatively small amounts from a large group of individual investors, okay? That's what we're all trying to do. Right, so with those concepts in mind, I'm going to start with, if I may, Alain, in the equity crowdfunding space. Can you tell us, Alain, who are you targeting in the diaspora? How much are they investing? What are they investing in? And how does your solution enable that? And you can refer to your journey with regulations in the European Union. Thanks.
No, thank you, Elizabeth. So for us, we are an equity crowdfunding platform, so we do only equity. So then this business is regulated in the Netherlands, and then to be into this equity space, you need to have a license. So for us, we then chose, because to get a license, it costs a lot of money. It's around 100,000 euros, but there are other investment vehicles that we use. So for instance, for us, we are using what we call a special purpose vehicle. So this is a kind of financial infrastructure where you pull a small amount of money from people, you put it in one big company, and then this company then can come to Ghana and then buy shares in that company in Ghana. So that's how we pull money from the diaspora. So this is regulated by the Chamber of Commerce. We don't need to go to the financial authority. So we set up this kind of facility, and then anyone from 100 euros can put money in it, in this SPV. And then we have this SPV then that buys shares in every company we invest in Africa. And then we invest in what? So we invest in startups. We invest in companies that are raising seed capital, and then we only invest in tech companies. So we don't do SMEs, we don't do companies without, growth opportunities, because for us, our mission is to build startups on the continent and then to create jobs. So, and we know, for instance, that the banking system is there for SMEs, company with, that are growing, but there are no funding for companies that are starting. So for us, we focus on the startup phase, and then we use what we call a venture capital mode. So we're looking for really early stage companies with high growth. We invest in many companies. Our aim is to invest every year in 100 startups, but only to have one success in the long run. So we can, because in the venture capital world, it's about the quantity, but having one good investment. So that's how we look at it. And then our mission is to give back wealth to the diaspora as investors. Thank you.
Quick question. If I am in the US, can I come onto your platform and make an investment?
First of all, we have many issues. Before you become even a US citizen coming to invest on my platform, my bank will also ask me, so who are first your investors on your platform? Because we only have to have Europeans first, and then Americans, because of the regulation in the US and then all those contracts between US and Europe, American investors are not allowed to, from the banking system in Europe, are not allowed to use European platform. So, no.
So let's just sit on that. This whole conference has been saying that the US is the biggest market for diaspora investment in Africa. And US-based people are not allowed to use a platform like Alain's. Right, so I find this completely crazy. It's very unfortunate, but that's an example of the type of barriers that we have today trying to channel funds in. Thanks so much. We're going to go into more details about those challenges in the next round. Let's move on to Andrew from Kiva. This is a particularly unique model where we're, again, in the US, very, very complex regulatory framework, and we are trying to channel funds from Americans to Africa, to African projects on the ground. And Kiva's essentially, when it addresses itself to Americans, it's not offering them an investment product per se, so they are unregulated. But then on the African side, they are effectively lending to via microfinance institutions. Okay, so I hope I described that correctly. And again, you can see what is required to find a solution within these regulatory frameworks that are so complex. Andrew, please tell us a little bit more about that model. Thanks.
Sure, thank you. So the best way to think about Kiva is basically the midway or midpoint between outright philanthropy and commercial investment. So basically, we provide users on the platform with opportunities to lend. So the individuals, mostly in the US, are able to get on the platform and lend to opportunities that are presented on the platform by our financial intermediary partners in emerging markets. And basically what Kiva has done is to democratize philanthropy. So you can lend as low as $25 or in multiples of $25 to these opportunities that are presented. So of course, to address the issue or the fact that this is actually a loan and the money has to come back, we chose to work with microfinance partners in emerging economies because basically credit is their core business. Kiva is registered as a nonprofit in the US. So basically, we are not necessarily presenting investment opportunities. I mean, in the first session, they mentioned that, one of the key drivers of, diaspora investments is actually impact. So I would say Kiva, what we are selling to the individuals or the users on the platform is basically an opportunity to contribute to social economic impact. And on the platform, they are able to lend or contribute to development based on their, I would say, different impact preferences. So we have opportunities to lend to, climate change, women, rural economies, agriculture, just based on their impact preference. And of course, in the US, they are able to get, I would say, like tax incentives for making some of these donations for both our individuals and corporate partners. However, we have in the past and are still looking for ways to provide return-seeking investment opportunities to our users on the platform. But of course, the biggest barrier really is regulation, because we now have to become subject to securities regulations in the US. And probably the institution as it's currently registered might need to take a different form and also be capitalized differently if we were to offer investment products to the general public. And of course, we are working with microfinance entities in emerging markets. So I would say a bulk of them are actually regulated entities, and local regulations have not yet, crowdfunding is not a common or mainstream way in which financial intermediaries raise funds. So we have found it taking a long time, or most of our transaction having to undergo like some extra level of scrutiny from central banks in emerging markets before we can actually set up or onboard our microfinance partners. So I would say those are the key differences between what Kiva offers and what an investment product would look like, basically.
Thank you so much. Here's another important thing for the audience to keep in mind when you're listening to this. Alain mentioned that an individual can put 100 euros through his platform. On Kiva, you can put $25. Imagine the compliance cost of what they've had to do proportional to that tiny, tiny ticket. It's completely disproportional. It's not surprising that Kiva is a non-profit. This is the central challenge of investing. The cost of compliance is really, really high, but the needs on the African side of the SMEs and startups are relatively small, okay, in comparison. That's what makes these investment instruments and models so challenging to get off the ground, and that's why such a broad range of stakeholders and de-risking institutions and donors and anyone that can reduce the cost of compliance on their behalf is so important. Quick question to you, David. Andrew, sorry. Do your people who invest through Kiva call themselves investors or donors or philanthropists?
I would say we call them social lenders, mainly because, yes, they are making a donation, which is in the form of a returnable grant. So this money there's the expectation that the money has to come back to them, but they have also offered like a credit risk guarantee. So in the event the end borrower, who is the micro entrepreneur, who's a client of the microfinance, is not able to pay, then that loan can also be written off on the lender's side. So basically, what we enable some of these micro insurance and financial intermediaries to do is to serve communities that they would otherwise not serve without the presence of this credit risk guarantee. So I would say in future models, we might, think about compensating these individuals for providing this guarantee over and above, say, providing, say, a return for their investment. Yeah.
Very interesting. Johannes, I'm going to go to you. Tell us, and I know you work in so many different ways. You said he was a securities lawyer, and that's the type of training that you need to get into this space. Tell us how you pool monies from your diaspora investors. I know there's a lot of jargon, like special purpose vehicle and trust fund, whatever. But again, keep in mind, all it is pooling money into something formal, okay? That's then going to invest in Africa. Johannes, tell us with as little jargon as possible how you do that.
Okay, thank you. First of all, diaspora investments happen whether they're laws or not, regulated or unregulated. They usually take place. Second, the challenge we face, and I've been in this space for 20 years, including with my day job, working as a lawyer, as a securities lawyer, is really how do we move from the small time people finding their own ways to pulling together money and investing to a more structured, institutionalized, as was said earlier and yesterday, more ordinary way of investing. If you want to scale up and pool funds and start investing at a larger scale, you have to comply with the laws and regulations of the country of origin and the destination of the investment. This is critical. When you scale up, when the amount of money gets more complex and complicated and the investment types are complicated, then you are visible on the radar to the regulators. And you have to remember, don't really hate the securities laws. They're created to protect the investors. They're consumer protection laws. In the US, they came about after the 1920s crash of the stock market, where many people lost their savings, life savings. The economy was devastated. So you have the 33 and the 34 Act, the Securities Exchange Act and the Securities Act, that protected primarily small investors. And the way it's set up, as Eric yesterday talked about it, to pull together investments, you have to be registered or you have to be exempted. To be a registered security, it's a very expensive compliance process, right? It's prohibitive for many, including bonds, by the way. They are registered securities. I have experience working and advising African governments, even those who got in trouble, getting out of trouble. So the alternative is there's an exception. The exception is you have to be an accredited investor. An accredited investor is you have to have a net worth of $1 million minus your primary residence. This is U.S. securities laws. Every Western developed country has their own securities laws. Some African countries also do have securities laws at different varying complexity level. Pooled investments, small family friends pool investments are allowed under a different exception. But more recently, in the last 10 years, I think it was 2012, there was a Jobs Act that tried to simplify the regulatory burden on investors in the U.S. And a more recent update that simplified again allowed the small pooled investment mechanisms. When I say small pool investments, these are people who don't know each other. You're aggregating investments into one pool for onward investment into your destination. So these varying aspects exist, but it's possible. For example, I worked on a specific opportunity where 350 Ethiopian American doctors pooled their resources and they raised $10 million. They're in the process of building a $100 million hospital in Ethiopia. But the compliance, when you're building a $100 million hospital, it's okay to spend the money required for compliance. And sometimes we think the investment may be frivolous. If people don't want to spend money on professional services, on accountants, on lawyers. And that's part of the educational challenge we face. But it was done, and we were able to do that. Same thing with bond investment. Similar, you're raising $100 million funds and a bond issuance. You should properly comply with the laws to be able to raise that kind of investment. So it's possible, it's done. But then at a smaller level, there are mechanisms, other mechanisms we use, for example, bunching together angel investors into an SPV vehicle, but it has to be managed with a professional fund manager with the capacity and knowledge. Sometimes everybody wants to be a fund manager, everybody wants to be an investor. It's not possible. Somebody who can't balance their checkbook should not be managing an investment fund, right? That's why there are laws. Right? That we don't want your hard-earned, every diaspora I know works hard, whether cleaning toilets or driving taxi or being a banker, it doesn't matter. People work very hard for those earned cash, and their money should be protected in the way they invest them. Because there are a lot of frauds. In my own work in the last 20 years, I've seen a lot of diaspora who've been swindled in their home country, whether it's in Kenya, Nigeria, in Zimbabwe, in Ethiopia. And these laws exist to protect those investors. So let's not look at them as a hurdle, but let's find, as a lawyer, I'm paid to find a way. And I tell you, I've never failed on a challenge that we were given as an institution to find a workaround. There's always a workaround, with the proper professional services to find a mechanism to invest. I don't want to continue. It's more, but I'll come back later.
Thanks so much, Johannes, and I really take my hat off to you for what you've had to navigate to do what you do. All right, Mohammed, I am curious, if Alain or myself or somebody wants to influence the home regulatory environment in Ethiopia by talking to local regulatory authorities, the central bank and maybe others, in order to create a safe and secure pathway for people abroad to invest through entities that are registered and incorporated in Ethiopia, how would your office help me?
Yeah, thank you. I think before coming to the specific question, I think for countries, we need to know that, where that country is positioned in terms of the overall ecosystem, the business environment. When it comes to the diaspora investment, except the prefix that we add diaspora, it's all about investments. It's all about investment. So the world is comprising of different countries with their own unique behavior, with their own unique characteristics in terms of the business environment, in terms of the regulatory frameworks. So as we always say that we need to map the diaspora, we also need to map the countries depending on the status of, the favorability of for business and also the regulatory frameworks. And also we need to have that the success factors depending on the specific natures of the countries, okay? We have developed and developing countries, we have the liberal and the illiberal countries, we have the open and maybe the closed or a command economy system. So in which specific condition and country specific condition is the diaspora investment become more successful? That is, so as a country, first, we are working to locate ourselves where we are to attract the diaspora investment. So it's to provide so that context-specific diaspora investment package. And coming to the specific question first, in Ethiopia, for instance, we do have more than 4,200 diaspora investment projects. In fact, all of them may not be operational now. Some of them operational, some of them in the pre-implementation process, maybe 51% in the real estate sector. We do have 471 hotels owned by diaspora investors, and maybe when it comes to job creation, the diaspora investment area is the second next to government in terms of creating jobs, in terms of employment, and also in terms of capital. It took 10% of the foreign direct investment in Ethiopia. So we are already working in engaging and in attracting diaspora investment. So what we do is basically, first, we identified the diaspora investment potentials in Ethiopia, sector-specific, region-specific potentials. Second, we provide the exhaustive list of the regulatory frameworks depending on each investment types. Let me say, for example, just before 3 years, there were 32 investment types that were not allowed for diaspora investors. Okay? Just 5 years before, the diaspora were not allowed to engage in the finance sector. Fintechs were not thinkable. So we prepared the exhaustive list of the investment arena, okay, the regulatory frameworks, and also the custom system. Just practical example. We have a multi-millionaire dollar investment project recently launched by the name Red Fox. They have a data center in the Silicon Valley. Now they are opening their own data center in Addis, in Ethiopia. So once they get the license and also they process everything, while they try to import their machineries and their equipments, our custom law didn't know those areas because we are new to these areas. So as a diaspora agency, we are responsible to compile the existing regulatory frameworks in each specific business areas and also in each specific regions. As a federal government, as a federal system, we do have different laws and regulations in each federal regions. So the diaspora must know that what's allowed, what is not allowed, what potential do we have and what we don't have. So as an office, whether you are coming individually, whether you are coming as a crowdfunding institution or as a potential diaspora investor, what you get from us is the potential investment areas, the areas restricted and allowed, and also the potential target we are aspiring to work on that. I think that's right.
I really wish that all African countries had an office like Mohammed's. Our jobs would be so much easier. It sounds stupid, but sometimes when you're dealing with regulators, you do feel like you're disconnected from all the other mandates of other government ministries, right? To support SMEs, to create jobs, to support gender and youth, etc. You do wish there was an agency that connected the dots for everyone. Okay, so we've understood, I think everyone in the room has understood that when you try and create a product, an investment product for the diaspora, you have to hold two tensions, two things that are in tension, right? You've got a regulatory environment in the global north that exists, as Johannes said, for very good reasons, but which nonetheless impedes the diaspora's ability to invest back home. That's a problem. And when it comes to getting the diaspora to invest in startups and SMEs, this problem is particularly pronounced. The cost of doing so is far too high relative to the size of the investment that is being made in the African SME or startup, okay? So some of the barriers, the regulatory barriers are there, like I said, for good reasons. I'm interested in what are the barriers that are there which could be removed or the cost of which could be reduced for some of these entities. So I'm going to ask my panelists to tell me their view from where they sit. What can the stakeholders in the room here, the grant-making organizations in this room, what can they do to help your model scale and to unlock the barriers to greater capital flows from the diaspora? And I'm going to start with Alain.
Thank you. So for me, I would say, regulation is one of our biggest barriers. And then I will really specify two things, what we call KYC and anti-money laundering policies where we are in Europe. So for us, just to give you an example, when we started our business, we had to register and then we had to open a bank account. So since our business was related to Africa, so we went to a bank, ING Bank. So one of the issues were like, you guys, you're going to be investing in Africa. So when we look at the current regulation, this is going to be a big problem on us. So we cannot open a bank account for you unless you have all the paperwork from the central bank that allows you to do business in Africa. So that was expensive. We spent 50,000 euros to get only that paper. So then, now we have the right to open a bank account. So now we want to invest. So when we want to invest, then again, other issues on anti-money laundering policy and then KYC. So KYC is knowing your customer. So we need to give a lot of information about our investors on the platform, and then this costs a lot of money, but obviously now today there are so many softwares, now it's easier. So this was one of the challenges. And then this anti-money laundering policy also came back. Since we are investing every year, we need to explain to the central bank how much money we are investing, who is investing, what is the return, when it's going to come back. So I would say in February, that's when we need to draw that report to the central bank. And then it's really a headache. And it's only for Africa, and Asia to some extent, but it's special to us. And then, and then the other issue we have as a startup in Europe is our business model. So when we go to private equity investors or venture capital investors, they don't see opportunities in Africa. So we are a fintech. So when they see a fintech, they will see a fintech that can work in Europe. When we link it to Africa, it's very confusing for them. So this, for us, really, from the regulatory point of view and then from the investment point of view, our biggest challenge. Thank you.
Got it. So stakeholders in the room, cost of compliance, KYC and AML, and understanding how Alain himself could raise capital for his own platform. Is he a fund? Is he a fintech? Is he European? Is he African? You know, these investors have got to tick a whole bunch of boxes, and he doesn't tick them all. And we need to do a better job as funds and investors of understanding how to not exclude fintechs like Alain's from raising capital. Right, on to you, Andrew.
Yeah, as I also mentioned, one of the biggest barrier, for Kiva, especially when it comes to transitioning from philanthropy to outright investment, is regulation. And of course, these regulations exist for a reason, to protect the public and the individuals, because, we have also started a parallel fund management business, but it's restricted to high net worth individuals and institutional investors. So, I've seen some models with the, I would say, central bank here in Kenya or the insurance regulator here in Kenya, where they have set up regulatory sandboxes to test out innovations. So this is where, some of these mainstream requirements can be lowered for new innovations, and these innovations are tested to see just how they can work in terms of serving the target segments. And once these have been tested, it can be a platform for developing sort of better or more tailored regulations for these new innovations that can be allowed to scale within this new environment. Now, as a global crowdfunding platform, we don't necessarily have targeted campaigns for diaspora communities, for instance, in the US, because the US is a big market with a very huge diaspora population. So awareness creation is another thing that we would prefer, that, if each country can have diaspora desks in their foreign missions to create awareness of the different investment options that the diaspora have, will help. Because as Kiva, we might not be able to reach to all Nigerians, Ugandans, Kenyans, in a targeted campaign. But if each of these respective governments could have ways of creating awareness within their communities, that will also be a good help for us.
Very well said. So I'm trying to think about how I can make tweetable summaries here. But I want to say to anyone who is in the development space, who wants to support diaspora investment in Africa, if your strategy does not include support to African regulatory authorities to create enabling frameworks, you're wasting your time. tweetable. Okay, let's move on to Johannes.
Thank you. So, just putting back my international development hat, there's a lot of work that's being done by donors, European and American donors in support of diaspora investment. I tell you, my own organization, Ethiopian Diaspora Business Forum, worked with USAID in creating a loan guarantee scheme to de-risk lending, for example. And most of the diaspora have been out for 30 years and come back home, they don't have a collateral. In most African countries, lending is based on collateral, availability of collaterals, right? And most of the diaspora come in and exhaust all of their savings, and then they don't have enough money for working capital or for, to keep on going as a business. So the loan guarantee schemes through what USAID called DCA, the Development Credit Association, provided 50% guarantee for a fee of the loans. So it was an $18 million facility. I'm happy to report when the program ended, there was 100% repayment, zero default. And most of the borrowers paid back ahead of time. There are other efforts. Blended financing is now in. It's become a fad, but it's a very important, earlier somebody mentioned, I think it was Stella, blended financing is now being used to leverage investments. That de-risking and leveraging allows you to offset your regulatory costs. Again, I think just stepping back, the regulatory issues are mostly on the West. In Africa, the problems we have are broader issues of enabling environment issues, right? Redundant regulatory headaches, corruption, and so on and so on. But on the sending side, the regulatory structures, it's really a cost issue. If you have the resources, you could comply, you could properly set up the compliance mechanisms and be able to raise the funds. So blended financing, there are a range of, I've been part of at least several of the most recent ones, providing incentives to funds, for example, impact funds, first loss mechanisms, to take that first loss risk and be able to encourage the funds to invest in diaspora investment. Now, the funds themselves, I've worked on advising funds set up across Africa. They have to be advised from the initial fund setup mechanism because the LPs require, the structure requires the risk mechanisms, the way they lend. So from the early stages, you have to get involved and provide that support. And so on and so on, right? So the biggest challenge are the political risk insurance, the currency risk, and all those issues can be addressed through the various now mechanisms that donors are offering, CEDA, GIZ, USAID. All of these organizations have a variety of diaspora-related investment promotion support, de-risking mechanisms. And they've been very helpful. Now, there's also private sector interest in de-risking some of these investments for a fee. Those are still developing. Some of them, their regulatory areas are still being worked out. But help is on the way.
Fantastic. Perhaps because those of us in the sort of small deal space, startups and SMEs, where there's generally a market failure across the private capital markets in general. So I'm talking about funds that they just can't serve segments of the startup and SME market because it's not affordable for them to do so. In that space, you've got also a corresponding market failure of blended finance. And in the crowdfunding models that Alain has and Andrew, I think that it's more complex for blended finance structures to get in there, and that if we do have enabling environments, and I do include regulatory frameworks in that in Africa, at least we are creating a starting point to formalize what is otherwise quite an informal investment space, and that helps these larger institutions to structure things, because they've also got boxes to tick, must be formal, etc. So again, I want to point that out because there's stakeholders in the room here that could really, that do have the flexibility to intervene in that space. Right, and yeah, Mohammed, when it comes to, I'm curious to speak to the point around harmonization and collaboration between African countries, particularly in zones like East Africa, where there's a strong dynamic and a large diaspora. How are you working with other East African countries, governments, agencies, regulators? Is there a willingness, is there some impetus to have conversations around harmonization of regulatory frameworks or whatnot?
Yeah, thank you. Again, just before that specific question on the finance, I think for the diaspora investment, I think the stakeholders should work to look for, both internal finance and external finance for diaspora investment projects. For internal finance, what we are doing is, for instance, all the banks, including the National Development Bank, to be diaspora sensitive in its financing packages. Okay, for example, SMS, when it comes to funding small and micro business activities, they are not considered in the diaspora in that category. So as an institution, we are pushing them to finance those small and low and medium scale investment projects and to make other private banks as well diaspora sensitive. Coming to the harmonization, yeah, as I said earlier, I think the countries, what the countries need to do is first to know where they are. The diaspora issue is not an option for we Africans. It is a must-to-do thing because it's all about financing projects, it's all about employment, and also it's all about having products so that to mitigate inflation and other lack of resources. So there are a lot of initiatives. I think these days there are proliferation of efforts. Almost, as you know, the Africa Union considered the African diaspora the 6th region, and also all the regional blocks, the IGAD, the COMESA, and all other regional blocks consider the diaspora issue as one part of their initiatives. There are a lot of packages. For example, in the IGAD, there is a policy harmonization for remittance. Okay, we are participating on that. How can we harmonize our policies so that remittance within Africa can be simple, low cost, and safe? And also, we are working to facilitate the African diaspora investment within Africa, to make African diaspora investment within Africa more simple. Okay, not to consider. For example, in the East African community, okay, once the regional bloc is well established, a Kenyan diaspora may find very simple to invest in Ethiopia, and the Ethiopian diaspora may find very simple to invest in Kenya. So there are a lot of efforts in harmonizing policies, integrating efforts, and also in calling the African diaspora to act unite. Thank you.
Thanks so much. I'm really happy to hear that. We have an agenda within the African Crowdfunding Association to harmonize investments crowdfunding regulations in the 5 countries within the IASRA bloc, so Tanzania, Uganda, Rwanda, Burundi, and Kenya. And IASRA is one of these organizations where you think you can go to have a conversation around harmonization of regulations, but it isn't really necessarily a thing, right? It doesn't have an office. You can't go to IASRA. It's a website. It relies so heavily on regulatory authorities having the willingness and sort of a cadence of meeting to actually carry a long project like this. So I'm happy to hear that there's progress in that domain. We're going to open to our audience for 5 minutes of Q&A. Right, we've got 1, 2, 3, that's a lot of Q&A. Let's start with gentleman in the back. He raised his hand. Please keep it very brief. Thanks.
Okay, hi everyone. So my name is Dennis Mavia. I'm the Executive Director at Deshka International, a youth-led non-profit working to empower communities in Athi River and Kibera. So my question goes to Andrew Kabucho. So if I went to a bank today asking for investment, I can use that money to invest anywhere in any kind of business. And understanding how donor works, some donors will be like, I'm giving this money, but I want you to for certain project. So is that the same case with Kiva? Like, do you guide people on how they invest the money they get from you? And if I'm investing $25, let's say, for example, how long does it take before I get my investment back? And am I getting the $25 or there's some pocket change that I get? So yeah, that's my question. Thank you.
Yeah, thank you for the question. So as I mentioned, Kiva works through financial intermediaries. So in between Kiva and the end borrower is usually our financial service provider. And so it's a financial service provider that's actually originating these lending opportunities from their network of entrepreneurs. So we don't necessarily dictate how they use the funding. So they just go about their day-to-day business, generate opportunities, and I would say feed these opportunities on the platform. As I mentioned also, the lenders or users on the platform, we call them social lenders, so they're mostly to contribute to social impact. And so basically on the $25 that they lend, the general expectation is that this $25 will be reimbursed, like the end borrower will make payment to the financial institutions and onwards back to Kiva and back to the lender. So that they can have the opportunity to relend that $25. Now, in future, as I mentioned, we are also looking at ways of providing return on this $25, but with the current regulatory setup, currently we are not able to do that. Thank you.
Thanks. There was a question from Almaz.
This question is actually to Mohammed. I am very, very happy with what you said. And so on a selfish note, I want to know how you are disseminating, for example, the list of investment opportunities for the diaspora. Who gets this list and how do we get access to it so that the diaspora, let's say, for example, within the African Diaspora Network, Johannes, how can we make this available to the community so that they can actually see it? So my concern always is these lists exist, but nobody knows where they are and how they can get access. So I love to see how that could be possible. And I want to tie this up to all the other diaspora, ministerial level diaspora engagement officers, because I think this is really the key to take these projects from idea to really for the diaspora. Instead of questioning where do I put my money, well, now we have an opportunity for the diaspora to invest in. There is one other thing that goes with it. Is it only for Ethiopians or is it open for other citizens within the continent? Thank you.
Lady in the blue jacket.
Thank you. Michelle Munemo, I look after diaspora banking at Standard Bank, also known as Stanbic, in South Africa. So my question is probably another selfish question around banking. So if you look at the products that banks provide for diaspora at the moment, it's your transactional bank account, some savings products, in some instances mortgage financing as well. They obviously do the remittances and insurance, so quite a traditional banking offering. And what I just wanted to understand from the panel is what role do you think banks should play in the space that you're in beyond what they're doing now? And here I'm specifically speaking about local banks, not international banks. Thank you.
Anyone want to take that question? Johannes? Okay, we'll take one more from the floor. Lady with the red, you, yes.
This is for Alan. Hi. So I'm founder of a company, so Wealth Tech. Basically, so you mentioned that your SPV, the business model, is very much VC-centric. So how do you source your deal flows? And also, what is the exit strategy for your portfolio companies? And have you had any exits? And that's what multiples?
All right, well, Johannes, could you respond briefly to the first question? Thanks.
Yeah, I mean, it's an untapped opportunity, and most of the local banks refuse to create specific products and services for the diaspora, and they stick to their usual structures. Sometimes it's dictated by the central bank regulatory schemes, but there's still a process. For example, you ask for collateral, and someone who's been away for 30, 40 years has no collateral, left because of the Civil War or whatnot, cannot borrow. We may have a collateral back in the country for origin. why can't they create a process? I know a specific example where the diaspora led to this kind of thinking, where the banks started looking at collaterals and credit histories in their country or where they lived, and then were able to link and be able to create a risk assessment process to be able to lend, right? The banks need to see the diaspora as an opportunity, as a business opportunity. They don't see them right now in many African countries. But like I said, part of the problem is the central banks. They are not also flexible in creating the flexibility to allow the banks to look beyond the national regulatory structures, the huge untapped opportunities.
Hashtag exchange controls. Okay, I don't know how we take Alain's response, and then I think we might have to wrap up. I'm getting eyes from Mauro.
Now, thank you. So, as I said, we are a VC. We use a VC business model. So, our exit strategy is 5 years. So, our hope is that in 5 years we will exit. So, our multiples are based on it's 21%. It's just how do we call it, ROI? But these are estimations. So, our dream, the VC business model, is to invest in something with less value today. Let's say we invest in your company, we give you 70,000 euros. As an example, it has zero value today. Our hope is that with it 75,000, in 3 or 4 years' time, your company will grow, will have a certain value. We have 8% in your company, and then we will exit. So how do we exit? We do it in 3 ways. So we do with corporate buyout. Most of the time, we want to build companies for corporates in Kenya, for instance, what they can buy, or we build a pipeline for other venture capital or private equity in that country, and then that's how we exit. Because what we see today, most startups in Africa go to raise money in the US, not in the local market. So we want to be that player. And then also to tap a little bit on the question she asked for the banks, I think banks in Africa need to move beyond banking. Beyond banking, it means investment. So as long as you don't have an investment product, don't come to the diaspora. I am sitting in the Netherlands. I have an investment product in the Netherlands, in my bank account. I can invest on the stock market in the Netherlands. So if I come and bring my money in South Africa, what do I get? I am secure where I am. I can put my money on the stock market in the Netherlands. I'm fine. But what do I get from your product? So for me, beyond banking, we need to go to start developing investment product on the continent. For me, it doesn't make sense that we don't have angel investors in Africa. We have millionaires, but we don't have angel investors. Financial institutions in Africa don't create investment funds that can pull, where they can pull money of these wealthy people to invest in the local economy. We are still banking. Remember that a startup to go for a loan, it will take it 3 to 4 years for working capital. But who is providing seed capital? No one in Africa, because we don't have VC funds and private equity funds. So banks need to go beyond banking. Thank you.
Thanks so much. Mauro? Okay.
I think there's one question for me.
Sorry?
There was one question here.
Sorry, go for it.
Okay, I think it's a very practical questions from the real practitioners. Almas, thank you. Well, I think the relevance, the importance of having a government body to specifically focus on diaspora issue is to use all the alternatives and all the means, to work on diaspora engagement. In our case, communicating and reaching out diasporas to disseminate informations. We do it in various ways. First, we do have diaspora diplomats in most of our embassies. For example, in 32 Ethiopian embassies abroad, we do have a diplomat that is specifically responsible to diaspora affairs. And those diplomats are directly responsible to our office. They took the annual plan from our office, and we support them in terms of other issues. So they are the first contact point, and they do have all the relevant information that we produce locally, that produce from other institutions. And also we do have, we work with various diaspora organizations. So those diaspora organizations, for sure, are as the contact point for the individual diasporas. For instance, just last year, we have a recognition program for diaspora organizations, and we recognize more than 52 diaspora organizations just directly by our President and Deputy Prime Minister. So these diaspora organizations are another contact point for information. And events are very important for that. Again, last year, for instance, we had a homecoming event in Ethiopia. During that homecoming event, we conducted more than 65 diaspora events in different parts of our country with the relevant government bodies, so that they directly present what they prioritize, what do they have. So such events and also other publications and the usual media communications are some of the approach we use. Thank you.
Omar, does that answer your question?
Yeah, well, the issue of diaspora currently is it's a kind of between the foreign direct investment and the local investment. So currently, until the regional blocs inaugurate their programs, okay, until they launch their package, so far by diaspora means Ethiopian origin. Thank you.
Thank you so much, everyone, for participating. Thank you for my amazing panel. We've got 45 minutes of networking, so feel free to continue with your questions.
Thank you, Elizabeth.